CoreWeave is a hyperscaler business really trying to serve companies that are building AI applications, large language models, inferencing, all the things that are now needed for the AI space. They started as a Bitcoin miner that has since changed and become a premium hyperscaler for companies that want their services. CoreWeave IPO'd in March of 2024. And the stock didn't move a whole lot. And I think part of it was that you had that big sell off going into the tariff related big sell off this year. But after that, the stock really rallied. And boy, investors really have gone for a ride. But since then, the stock has really settled down. And more recently, there's been a little more interest in CoreWeave. So the stock's really gone places. It's a $58 billion market cap with revenues of 3.5 billion. No profit yet, and analysts think it's fairly priced. The business is growing very quickly. And every time this business, they're in growth mode and they're putting a lot of capital into their data centers. So just keep that in mind. A lot of capital, and there's a lot of debt involved in CoreWeave as well. CoreWeave is being sold at a 50% premium. The stock price is 50% too high compared to the value of its cash flows and its earnings per share. And keep in mind, this is an indebted business. If things slow down for this premium hyperscale services industry, CoreWeave is really going to struggle. They don't have anything else to fall back on. It's just they sell premium capacity compute in their data center to companies that want to pay a lot of money for it. And I think that I'm using earnings per share for 2027, by the way. So I'm kind of being optimistic in my forecast. Even when I use that number, just to see where the valuation lands, it's well below its current stock price. So there's just too much risk, too much to really risk capital on. And keep in mind, CoreWeave, the competitors for CoreWeave are massive. These competitors include Amazon with AWS, Microsoft with Azure, Google, and now Oracle. Those organizations have hundreds of billions of free cash flow that they could put into their operations. And if there is some type of slowdown in this particular market, those businesses have other types of revenues that they could fall back on, while CoreWeave wouldn't.